You probably shouldn't broadcast it because now you can hear me or you can't hear me. Testing, 1, 2, 3, test, test, test. It shows that my microphone's working.
I can still, well, I can just still see a still photo of you. I can't see the motion picture of you anymore.
But can you hear me? I don't care about the picture.
And it just has you in a little circle.
Well, we don't care about that. Can you hear me?
Nope, I still can't hear you.
Well, it's showing that I'm
If I
broadcasting.
can hear you, I will say something. Speakers. Okay.
Because I can hear you fine. And it shows that my microphone is actually broadcasting to the room. So I'm guessing that...
One of those it is.
You should be hearing me. It shows that I'm broadcasting in the room, so...
Okay, which speakers?
Your default speakers, system speakers. Are you using a headset? Are you using a headset?
Maybe. Maybe not. But which of those speakers should I pick? Speaker number 1, number 2, number 3, number 4, number 5. System speakers, well, they'll change the default.
You should be hearing me. It shows that I'm broadcasting. The people in the room, if there was anybody in here, they would be listening to me right now.
I have no idea which ones we did.
Because that's why, whenever I talk, that's why my picture shows up.
Keep changing.
So you should be able to see.
You better get rolling because it's 6:56. So maybe that's just not going to work. I should have started this earlier. Let me see. Oh. Big picture, it doesn't really matter. Oh. Is Robert? Hello? 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 Well, someone from Texas. Okay, so I don't know which speakers I'm going to pick. None of them are default. Okay, no, that's the important thing. Okay, perfect. Thank you.
It's just that you can't hear me.
Alrighty. Let's see here. Okay, well, we might as well get started. What do you say? Well, we got a couple minutes, so maybe get 2 minutes. Well, Blackhawks lost last night in a 7-game series. Playoffs. Getting the Stanley Cup, it was a heartbreaker, lost in overtime. What can you do? Boys just did not seem to want to win bad enough. Guess making $4, $5, $6, $8, $9 million a year. Where's the motivation? Okay, well, we might as well get started here. We're waiting for the Chihuahua to stop. Can you hear the Chihuahua? It's my talking dog. He talks Wookiee. Okay, now if anyone has any questions, once you take off, Sandy, I guess I can just see them over here. Over here, or someplace. Or we'll just tell them tonight, no questions. Yeah, there'll be no questions tonight because I won't be able to answer them for you. Otherwise, people look at this endless stream of whatever you call it. All right. Okay, we'll get started. Okay, today we're going to be talking about stock. Well, not just stock, but any kind of an asset. We're going to be talking about technical analysis. We're going to be using Apple stock tonight as an example. So this is on the new FreeCharts website. As you may have already guessed, if you've been to the FreeCharts website already, you get commodity quotes, stock quotes, mutual fund quotes, Forex quotes, portfolio manager. We've got partners area where we'll be filling that up with people that we've struck deals with, where we'll be able to market their products and services through our partners area. Now, these are products that we've looked at that we feel comfortable marketing on our website. And then you'll see on the website, although there isn't one right now, but you'll see ads along the sides right here. Right there you can see that ad. That's supposed to be an ad, but that's Google's AdSense, and that's screwed up. It's part of the growing pains, I guess, or making things work. There's also supposed to be 2 other ads, but the ad agency is not very good that we're using, and they just they fail to populate it. CNE installed code there, so that when they've got inventory for ads, that they just pop up on our website. So we don't even know who the advertisers are. But in any case, that's a little guy right there. Now, for people who would be new to this, they could press on this red button, and then there'd be an opportunity for them to subscribe to the Free Charts newsletter. They just put their name in there, put their email address in here, and it needs to be the best email address that they can be reached at. Yeah, because if they don't read that, I sent an email to a fellow on Friday, and I talked to him today. He goes, "Oh, golly, I never even checked that email." Well, the person that checked that email is probably not the good email for us to have. And we'll also have a thing that will pop up here because not everyone's going to notice this to subscribe here because it's sideways. And, it's good, but we're also going to have a little pop-up right there that's going to provide us where a person can sign up, or when we have specials, when we have special speakers and that kind of thing, they come and talk through the webinar that we can work out special deals with and that kind of thing. Talked to John Nigerian's office today, and Iggy is supposed to be getting back to me, but unfortunately Iggy is apparently very busy because Iggy was supposed to get back to me a month or two ago and never got back to me. So I don't know that Iggy is going to be a real good contact for us. But anyways, I was trying to, as I mentioned to you guys last week, I think in the OptionsNet webinar, we kind of combined it because of the technical difficulties and that kind of stuff. I was trying to get a hold of the folks there at their office to see if we could get a link or if we could get some sort of special dispensation so we can get you some books on how John Nigerian and Pete Nigerian, how they trade options, so you can get introduced to their system. There's a couple other systems that I'm going to be bringing to the table as well that you'll want to take a close look at. One of them is a friend of mine. He started a group called CFRN, and he's located out in Arizona. But he has a very interesting day trading program. Now, historically, I've not been too enthralled with day trading, but I think that this fellow has a pretty interesting system. I've looked at the system. I'm very familiar with the system. I used to day trade the E-mini myself, as well as other markets, using very similar indicators to what he uses. He puts a couple little tweaks on them, and after watching how his tweaks work, I think that his system was probably a little better than mine. My system was not all that it could be. And the other thing is I'm using a bigger screen. When I was using a small laptop screen, I'm an old guy and don't have great eyes to begin with. But boy, looking at a small screen with all this stuff on it is pretty difficult. That's one of the reasons why I really like the way Free Charts has turned out. It's big, it's open, it's wide open, it's bright, and that kind of thing. It's a little easier on the eyes working with this kind of stuff than it is with working in those little bitty laptops with little bitty screens or tablets and that kind of thing, where they're kind of dark in the back. And, oh man, eyes just take a beating. So, anyways, and then we've got some other options guys. Dan Sheridan is one of them. We're trying to work out a deal where I don't know if we can, maybe we can work out a deal where we can get significant discounts for our people and to go through his trainings and that kind of stuff. And there's a couple other guys that are really, really outstanding traders. One of them was, I think he was voted the #1 trader in 2012 or 2013. And it's not the first, I think it's not the first time that he has won that award. It was put out by which magazine, by which organizations. But the guy is a phenomenal trader and has been a trader for decades. And we're trying to work out a deal with him to bring better product and more product to you, our viewers. Now, the idea is that if we bring these things to you, if they're at a significant discount, that there's actually some interest. It is foolish for us to go and try to bargain and try to get, even if we get a 20 or 30 or 40% discount for you guys, and you guys have no intention of spending $20 to, to listen to some of the greatest traders in the world, to listen to them speak. Some of these guys charge thousands and thousands and thousands of dollars for people to get access to them. So if we can find a thing where normally they charge $500 or $600, we can get you a seat for $350 or $250 or something like that. We need to feel somewhat confident that you're going to show up and you're going to pay for it and you're going to learn something from it. So there's something for the presenter as well as there's something for the listener. The presenter being somebody who's been an expert in the business for decades, and you being, so both you gain something. They make money. That's how they make money now, by basically coaching or consulting, maybe would be a better term, but helping people who are trying to make a lot of money in the markets. They're trying to help you accomplish your goals. So if that is something that's of interest to you, let us know in the coming weeks and a couple of months, over the next couple of months. Through the summer, we're not going to be doing too much. We're going to start planning something. Katie and I have been kicking around the idea of putting together something that'll be spectacular, and it won't be cheap. So if you think you're going to get in for $200 or $300 or $400, that's probably not going to cut it. But it's probably going to be something that's going to be $3,500, $4,000 to land. It'll be in Naples, and we'll bring down from Chicago and New York some of the finest talent, the trading talent in the world, and have them come down and speak here for 2 or 3 days and ask them anything you want to ask about trading. You get to hobnob with them, you have dinner with them, you have lunch with them, and we'll bring a number of other people. And plus, we'll have some opportunities to go out and do some fishing out in the Gulf, and maybe some golf at some of the finest golf courses down here in Southwest Florida. I'm not a golfer, so I couldn't really tell you how good they are, why they're good. In fact, I think those golf courses would really prefer that I stay off of those golf courses. Anyways, I am not a big fan of golf. Just I prefer to shoot rifles long range, and for me, it does pretty much the same thing. You have to control your pulse. You have to control your emotions. You have to control your breathing. You have to try to stay focused and stay calm, because just the beat of your heart. If you can't slow it down, at least for a little while, and slow down your breathing at least for a few seconds, half a minute. You can't slow that kind of stuff down. You're not going to be able to shoot out 5, 6, 7, 800 yards adequately. And for me, that is as therapeutic as going on and smacking the ball around. But I know a lot of people like that game, and it's there's a lot of money in it, I guess. You've got a lot of people playing it. So, anyways, I think it's a beautiful course around here. Boy, I'd love to just lay out there on some of those greens and be able to shoot back 500 yards towards where they're teeing off from. Oh, yeah, beautiful, wide open shots. Great shooting ones. You get a deer to stand down there, me at one end, and the 300 Win Mag. Your 3.8 look good, and you take them up to 1,000 yards and have dinner. But anyways, on this, we're going to have some interesting people that we're kicking around the idea, and we'll be talking about it more and more in the coming weeks or the next few months. And if there is some level of interest, we'll put this together. Otherwise, we may not put it together, or we may just go to the outside and just go. There's organizations out there that just promote these things. They market them, they promote them, and they take a big piece of the pie. But then there ain't no bargains to be had by nobody. everyone pays full retail. And so anyways, we'd like to get some of our people in there first, and if that's something that's of interest to people, then we hope that they would let us know. Okay, so anyways, we're on freecharts.com, and we've looked at of course, there's commodity quotes, stock quotes, mutual fund quotes, and if there's some things on there that used to be on free charts that are not on there now, let us know. Let us know. We've had one person indicate there was one thing that they didn't care for, or one thing that we don't have now that we used to have. And what I'm finding is that as I go through this website, as I dig deeper into this data feed that is provided to us, and Sandy had to kind of work with it as well as the folks who provided it for us, and we had to manipulate it and massage it to make it work and put it in a special responsive website theme, or whatever it's called. Anyways, there's some things that are not going to be on there. There's some things we had on the site, and we were able to track what pages were looked at. And whoever it was, Casper, I think it was their handle or whatever it's called, Avatar. I forget what those little buttons are called, but anyways, I think their name was Casper. Anyways, what they were asking for, I don't think was seldom ever looked at, which I was surprised actually, because what they're asking for was really something that was actually a pretty useful tool, but no one ever used it. And I think part of the problem was it, until recently we weren't able to make videos and put them together quite the way we're able to now. Now making videos is a little bit easier, and we've got some good cameras, and we've got some good technology, and we've got some good know-how. Sandy does this stuff every day. I mean, he does things for some big charity events down here, and does some things for a variety of things, and so he's familiar with all that stuff. So he brings that all to the table, and it helps us out a lot. So okay, so let's get back to here. Okay, Apple stock is what we're going to look at. First, we're just looking at stocks, and we know that up here we put our symbol in there, Apple, and okay, then we've got Apple. Oh, by the way, the first chart that shows up was called an area chart, and obviously for technical analysis, you're going to immediately want to move away from that. So what you'll do is you put your symbol in there, and then you're going to come up with something that looks like this. In this particular case, we put AAPL for Apple, and it shows that it's traded on the NASDAQ. It shows it was down $4.35 a share, down about 0.7%. And here's another area chart, which you would customize if you wanted to do any kind of a technical analysis or anything like that. And it talks about the volume, the average volume, the volume today, the 52-week range, where it's been to where it's at right now, and from its low to its high, and today's range from high to low. It's actually had a pretty decent range. It had a $12 range today, $12. So that's a pretty decent range. Okay, and so if you wanted to know more information about this stock, you can just go right here, and it would give you the last 5 days what the trading range has been, detailed quotes. It gives you the open, the high, the low, the last change, the percent change, and the volume. It does it for each day for the last 5 days, and then you'll see here you've got the 5-day information, which you really have right there as well. But then you've got the 1 month, the 3 month, the 6 month, the 12 month, and then the year-to-date performance. So it's some pretty interesting stuff right there. And you can get some additional information. You can get them to sort different ways and that kind of stuff. This is a pretty slick little tool. Okay, so now I've taken the liberty of putting this chart together in advance, just so I didn't have to waste your time with that. But if you don't waste your time, let me know, I guess. Anyways, here's the chart right here, and let me put my glasses on so I can see it better. Okay, this shows, you can see as I move the cursor back and forth, see as I move it around here, you can see right here, this changes. These figures change because that is April 14th. Hey, that was my birthday. That was a good day. And then it, as I go here, these numbers up here change. Now these numbers up here, those are just today's numbers. Okay, so I've got, then I've also got the 3-day and the 9-day moving average, simple moving average. The 3-day is represented by the red line, and the 9-day is represented by the green line. And then we've got stochastics right here. And as you can see, stochastics would indicate, and stochastics is a momentum indicator. And if you're not terribly familiar with stochastics, sometime we can have just a lesson about stochastics. And we can actually take one indicator each week and just really study that indicator and do example after example after example until you're very well versed. I mean, and just keep going over and over again. It might not be terribly exciting type of webinars, but it'll sure as heck help you learn what those are for. In fact, we may actually, we'll have to check and see how we could do this, but if you've got a microphone and a camera on your computer, I'm talking to you guys out there, we may actually be able to put you onto FreeCharts, which you are able to get on there anyways, and build a chart and then start making that interactive and having you guys start where you're actually training. One of the best ways to learn something is to train other people, to teach other people that may not be as far along as you. And boy, you'll be surprised at how quick all of a sudden you realize how much you know. And your confidence will just skyrocket. Okay, the next thing we have is the RSI, Relative Strength Index. Now, if it's 30 or below, that number right there, it's 7307 right now. If it's 30 or below, that means that that product or that asset, in this particular case, Apple, that would mean it was oversold. If it's 70 or above, that means it's overbought and it's due for a retracement. Now, it doesn't mean it's always going to retrace, but it means that more than likely, or extreme, I shouldn't say that, maybe I should say it's highly likely that you're going to see a bit of a pullback. Now what could happen is this market could just start going sideways, just go sideways, day after day after day after day, and then you know what happens? These numbers fall off, but the market never really drops. So that becomes the new normal. And so anyways, this is how the RSI works. And this, to me, the way I look at the RSI, I envision 100 people in a trading room, in an enclosed room. This is just the way I envision this. You can take this for what it's worth. Anyways, I look at this as 100 people in there, and I think out of these 100 people, if over 70 people have bought, that's too many buyers, and sooner or later someone is going to start selling. And when those people start selling, those 70 or 75 or 78 people, in this particular case, there's 73 out of 100 people. Now this is not a scientific approach to it, but it's my way of doing it. Is I look at this and I think, okay, it's overbought. That means there's 73 people in here who are buying. And then on the other hand, if the market is going down and the people, people have been selling, I look at it and I think, well, okay, 70% of the people are selling, 75% of the people are selling, 80% of the people are selling. Now it's oversold. Too many people have sold it, and now the price is cheap. Because you know what they say, the best cure for high prices is high prices. Then no one buys a particular product, and next thing you know, the price falls, and when it gets to be a bargain, when enough people think it's reasonably priced again, they'll come in and start buying the product again if it has any value. Same thing about low prices. What's the best thing for low prices? Well, if you've got a good product or a service, and the best cure for low prices, because pretty soon you get so busy. If you're a contractor, for instance, and you're only charging $20 an hour right now, you're going to find all the work you can stand. Well, the problem with that is that pretty soon you're so booked that you can't even do the work for 30 or that you would absolutely get 30 or 40 or $50 an hour for. So pretty soon you can't even take the $20 jobs anymore. You're forced by economics to charge higher prices. You're not forced to. I mean, you can still do it, but that's kind of silly. But anyways, this is how simple technical analysis really is. So in this particular instance, this tells me that maybe Thursday or Friday, there was 80 bulls in the room. There were 80 buyers in the room. Out of 100 buyers, 80 of them, or out of 100 traders rather, 80 of them were buyers. Now they've run out of buyers. So what happens when you run out of buyers? All you got left in the room is sellers. Things start getting sold. And if they can't get them to buy, it's $640 a share. Then they'll offer it at $639 a share. They can't get it at $639, they'll go to $638. And that's when you see that market ticking down and ticking down and ticking down. They've got all these bids and offers, but are people really willing to buy at $630 or $632, or is it? Well, maybe not. So the $628 becomes where the market closed at. It actually went down way below that today. So what was the low today? $622.50, and it had a high of so what was the high today? $634. So it had a $12. There's a $12 range in there. So somewhere in the $12 range, that's where people felt like they were comfortable buying or selling. But at the end of the day, the market was, this particular stock was down pretty good, and about 0.7%. But when your stock is $630, that's pretty significant. So for me, if I were a stock trader, would I buy this stock? No. This stock is just brutally expensive, and we've gone through several examples before with options and with using OptionView. Which, if you're not using OptionView, right down here we've got a little advertisement for OptionView, because as you know, we've worked out a deal with OptionView, and you can see our little disclosure buttons down here that Sandy put on there for us that discloses, so we can say legal, that we are an affiliate of OptionView, which means that every time someone from your group, for all of you, you test drive OptionView and buy OptionView, we get a little commission. So and we love that. We love to get that little commission. It's not a lot of money, but even if we weren't getting a commission on it, we would still be promoting OptionView. In fact, for probably the first 10 years or 15 years of having my brokerage firm, and we were at enormous volume in terms of trading volume. We were an enormous brokerage firm, and the interesting thing is that we had OptionView on our business cards that we used OptionView. Now, we were actually borrowing a little prestige from OptionView because people didn't really know my company from Adam, but they were very familiar with OptionView. But we used OptionView all the time. We used it every day, day in and day out. It was constantly being used. We were wearing that poor computer out, and we just believe in that product a great deal. And in fact, I actually have still wound up here. Let me see if Apple is in here. I don't know if Apple is in here or not. Oh, there it is. Well, let's see if we get any stock prices. See if this late in the day. Okay, nope, it wiped them out. Why it does that, I do not know. We have to get with the guys from Apple and can show it to me so I can get that. That's one of the nice things about Apple too is that you can. Oh, take that one too. You can call those guys just about any time. They've been tremendous. James Hogan, awesome guy to work with, and he knows that program backwards and forwards. And if you want to be a solid trader, let's say you're trading $100,000 or $150,000, $200,000 in your portfolio. So you spend $800 or $1,000 on option deals. I think that you're gonna. I think, my own opinion is, if you use option view properly, that'll probably keep you out of more trades in your first month. And this thing is going to cost you for a lifetime. And the other thing is, I think it's going to put you into trades or guide you to trades that you're going to that you would have missed. And there's a ton of things to learn, and no one's getting rich off. These guys put so much engineering time into Len Yates and his group of guys. They have engineered an amazing product. So you think, oh, now they're just sitting back and making a lot of money on their past invention. That is not the case. These guys have updates, I think, once or twice a week, or sometimes, well, maybe not that often, maybe once or twice a month. But it seems like there's an update in this program. It might just be modest updates, or it might just be background updates. I don't know, but the program is an awesome program. So, anyways, if I were looking at Apple to trade Apple, I would absolutely trade Apple with options. Why? Because let's say I want to trade Apple stock, and let's say I've got. Let's say I want to trade 5,000 shares of Apple. Okay, well, that sounds like a lot. Let's try 500 shares. Okay, it's $622. That's $311,000. That is probably not, even if I had a $20 million portfolio, I don't think I'd take that kind of position with Apple right off the bat. I think it'd be something that I'd kind of leg into, and I would kind of fade the market a bit, so to speak, and work at it in that regard. I would not just all of a sudden just lay out 300 grand, especially when most all trading nowadays is going to be very, very short term, which I wrote about in the newsletter today. The government has just these crazy idiots in Washington who are run by Obama, who's just a moron. These guys have destroyed the credibility of our creditworthiness in this country, and also they've destroyed the reliability and credibility of any information coming out of the government, whether it's the USDA, the job numbers, anything that's coming out of there. It is constantly subject to revision, and that is just awful. Now it's been like that for decades, where there's numbers that are being revised, this kind of thing. It's got this and that. Or I remember a few years ago there was some 100,000 boxes or 1,000,000 boxes of frozen concentrated horseshoes that hadn't been counted, or there'd been a mathematical error. But that was a one-time thing. But now it's every single month, and you just can't believe anything that these knuckleheads say. So I think that it's really damaging the markets, and so I think that the trading is becoming much more short term. The idea of buy and hold or buy and buy and hold. It just the likelihood of that being a good plan long term is just unnerving to me. Yeah, it might work good for 6 months, a year, 2 years, But you know, back in 2005 and 2006 and 2007, we live in Naples, and we had my brokerage firm was in Naples, and we had a lady that came into our office and said that she was concerned about what was going to be, you know, what she felt was going to be going on in the markets. And she said, well, you know, you tell me that, you know, bad things are likely to happen in these markets. And then we started hearing, you know, bad things about General Motors. We started hearing bad things about Allianz and what was it, some of these other companies. You know, then Merrill Lynch went bye-bye, and Lehman Brothers and Bear Stearns, and you know, excuse me. And she was saying, well, you know, how can I hedge my portfolio before, you know, before all those bye-bye in case it does? I said, you got to buy puts. There is no way to hedge it that I know of, other than, you know, if you want to stay in a paper market. One of the ways you can hedge your portfolio is just getting out. Just get out. And you know, leave 10% of your money in there and buy some call spreads. And as they go up, as the market goes up, you just ladder them up and just ladder them up. And, you know, but other than that, I have no way of knowing. And you're still not going to get the full, even 50 or 60% of the move to the upside. You're going to get maybe 20 or 30%. But at least the market turns around like it did. You start dropping like a rock. You're not going to give up 40 or 50% of your entire portfolio. We looked at some puts. We looked at one put, and it was right. It was an at the money put, and the volatility the market was starting to come down already. And I said, you know, the writing's on the wall. I mean, look, you know, I've been telling you this for months and months, and you know, I told you, all you got to do is look at the housing numbers and know that when the housing numbers are basically a third or you know, half of what they were 2 years ago, well, where do you think the economy's going to go? Because you know, this market has no place to go except down. It's been pushed up artificially. It's going to break. And she had it was going to be around $3,800 to start buying puts, the put spreads, to start protecting herself. She wouldn't do it. So she came back maybe a year later, not even a year later, maybe 7 or 8 months later. The market had devastated them because what she didn't tell me was they were on margin. So they were short them. They were already like double pressed on the market. Anyways, so where one person would have lost $1, she was losing $2 because she had margined up her account and that kind. And she had put up her house as collateral, and it was just a terrible mess. Anyways, she came back later on, and she said, well, you know, should have hedged. And there are some interesting ways to do things with options that can really, really save you a lot of money. And when you buy options, you know, you buy an option. Option represents 100 shares, and just one option, 100 shares. So okay, let's say an option is $1.50. It's virtually at the money. So let's say a 620 put. It's got 60 days of life in it. Let's say that it's worth $2 or $3. Okay, so you're buying $200 or $300. You're buying an option that 100,000 or 100 shares at $600 a share. Let's say it's $620 a share. Okay, that's $62,000 that you're controlling for maybe $300 for 60 days. You know, you're not getting a lifetime on it, but 60 days is pretty nice. And most everything that's going to happen is going to happen within 60 days. And then you look at it again. You look at it again. And look at it again. You know. So, anyways, it's pretty interesting when you do it. So, anyways, I hope you've enjoyed the look at the new setup with free charts. I hope you'll go through there and take a look-see at it. I know Sandy's working feverishly to get this theme to show our ads because, quite frankly, if we're not selling ads, having a website is just absolutely pointless because the money, it's a money pit. And I've been supporting this money pit since I believe it was 1997 or 1998. So this has been a long time. So it's got to support itself or it's got to go bye-bye. And anyways, I hope that you guys will, tell your friends about it so we get more traffic, and I hope we can get our ads fixed. And I hope you enjoy the website. The website is there for free. It's been there for free from the beginning, and it is simple, simple, simple to navigate. It's not like some of these websites where it says it's free or even says it's free in its name, but when you get there, you and I know it ain't free. And their websites are so complex and so cumbersome. I was in one room just maybe 4 months ago. I was there. I was looking at them with a guy, and he was telling me they're free. I'm like, where the hell is it free? I can't find anything here. Where's the free stuff? Everything was tagged. Everything was attached to some service that they charge you $19 a month for, or $29 a month for, or $87 a month for. So it was unbelievable. And it's one of when you do a search, it's one of the top websites. Of course, the guys that own it, these brothers, they've got a fortune, and but it's pretty misleading. Ours are free. They're not as fancy. They're not all. But you know what? We also are not practicing deception. So anyways, I hope you enjoyed the website. And if you have any questions, feel free to ask me, and I'll do the best I can to answer. Now, you guys can just go through there and look at these things, look at these moving averages, look at the stochastics, look at the RSI, and you'll get to the point where you can actually just eyeball these things, and you'll have a pretty good idea. You'll be in the ballpark as to where it's going. What do you think it's doing? And we'll go from there. So I know Sandy's got some family issues that he needs to deal with tonight, and I'm still licking my wounds from the Hawks letting me down last night. They let themselves down too, but I was really disappointed. Really, well, I don't like LA. Don't like much of anything about California. The countryside is nice, but you still got to deal with all the people from California. Anyways, I hope you enjoy the website, and tomorrow night we'll be continuing on what we started last week, which was why we trade options. And tomorrow we're going to be looking at how to buy calls, long calls. There's an art form to buying and selling options, and we're going to look at buying calls tomorrow. And it'll be pretty interesting. It's not going to be terribly in depth because these things are not in depth. One of the things I learned years ago when I was working with my father in the construction business, we would disassemble factories and reassemble them in some other location around the country or outside the country. And what he taught me early on was what he was taught early on, and that was that just take things a bite at a time. If you just take things at a bite at a time, you should be able to digest it and discern it. And you should be good to go. So, anyways, look forward to seeing you in tomorrow night's webinar, and we'll go from there. Thanks a lot. Have a nice evening.